Palantir had a massive earnings report, and now the share price has taken off like a rocket. Share price went from like $40 to $60 in a matter of a month, which is ridiculous. And a lot of people are questioning if they should hold on to the stock or maybe sell for a profit. Well, in this video, I'll answer the question, can Palantir go to $100? Now, there's three things I'll touch on. I'll give you my summary of the earnings report. We'll also take a look at Palantir within Tykr. And then number three, stay to the end, I'll give you one warning to pay attention to with a stock. All right, before we dive in, if you're new to investing or want to get better at investing, you're in the right place. Here at Tykr, we're all about clear, confident investing. All right, number one, here's some of the highlights from that earnings report. And again, I'll keep this really short and sweet. Number one, this stock flipped from watch to on sale in Tykr. I know this is more of a Tykr thing, but that tells us that earnings report was really positive. The EPS is increasing. That's what we want to see. Another hot point, Palantir has now been added to the S&P 500. Playing with the big boys and girls. That's a great place to be. Next point, EPS estimate was 9 cents. They came in at 10 cents. The revenue estimate was 701 million, and they came in at 726 million. And the revenue grew by 30% year over year. That's huge. Some key drivers behind this include adoption of AI with the US government, including a near $100 million contract with the US government, and this is a big one, a near $1 billion contract with the Navy. Honestly, from a reporting standpoint, things could not be going better for Palantir. This is fantastic for investors. All right, number two, let's jump into Tykr and take a look at how the stock is doing. So we know this stock flipped to on sale. Only about 15% of the stocks actually make it to on sale. If you haven't used Tykr, we created pretty much a traffic light rating system. Stocks are either on sale, watch, or overpriced. All right, I'm gonna walk through real quick here what I call the 7. It's the 7 key steps to determine if a stock is truly a really strong investment or not. Here we go. Number one, this stock is on sale. Again, that's where you want to be. So we're 1 for 1. Number two, I look at the score. The higher the score, the safer in the investment. If you can get over 50, that's really good. So we're 2 for 2. Number three is the margin of safety. If you can get over 50%, that's really good. The higher the margin of safety, the higher potential returns you can make. So far we're 3 for 3. In the middle, we have the 4M score that looks at more than just the numbers. It looks at the entire business, the competition, and the management. You want to be an 80 or higher as like a definitive buy. Anything that's a 59 or lower is a sell. In this case, it's in the middle. So I'm not going to give it a point here. So far, we are 3 for 4. Let's scroll down. Look at the 5-year returns. I like to set my charts in Tykr to 5 years. The reason is I like to compare to the S&P 500. Typically, the S&P 500 returns between 80 and 90% over 5 years. In this case, Palantir is 534%. Now we know past results don't determine future results, but it is another level of confidence that tells us we've got a stock that's consistent, and it's not just beating the market 1 year, 2 years, it's 5 years. And it's not just beating by a little, it's by a lot. So far, we are 4 for 5. Let's keep going. 2 more checkpoints to look at. We go to the financials tab, go to income statement, and then EPS. EPS is the number one most important metric to pay attention to. It's essentially the profits of the company. Take a look at this. This stock is consistently increasing its profits, and we know this was back in 2022, actually September of 22, when things really started to change. The reason is when a stock flips from not profitable to profitable, that's huge. Well, Palantir hit that point, and then they've been on a tear ever since. All right, so far we are 5 for 6. Let's go up to that earnings calendar. This is the last thing to look at. Institutions get really confident when you have a stock that continuously beats those earnings estimates. So in this case, check this out. The last miss they had was 2022, and ever since, they've been beating those estimates. That is a fantastic sign. So this stock is a 6 out of 7 on what we call the 7. Getting all 7 is very difficult to do. In this case, it's confirmation. If you're holding the stock, I probably wouldn't sell the stock. It's got a lot of runway ahead of it. Overall, this is a good sign. This stock is definitely a strong investment, and I probably wouldn't sell right now. Now, the third thing I want to touch on is something to be aware of. This isn't specific to Palantir. This is specific to the market. With Trump being elected in the office, we can expect more tariff negotiations with China. He already talked about doing that. To rewind the clocks back a few years, this was 2017. It was actually September of 2017 through March of 2018. There were the negotiations with China on the tariffs. Market went down, I think about 12%, 15%, somewhere in there. A lot of tech stocks took a nosedive much further down than that, but we could see semiconductor stocks getting hit hard. Tech stocks will probably fall back. Palantir could a little, so just brace yourself for that moment. I'm setting some cash aside, just getting ready with all my stocks in my portfolio, Palantir being one of them. When the market does pull down, I do plan on buying more, especially of Palantir. So just put your seatbelt on, wait for the roller coaster to go down a little bit. It's not the end of the world. We'll ride it back up, but be ready. You never want to be in a position where the market goes down and you don't have dry powder or cash available. You want to set some aside now. Get ready, because when the stock does go down and it continuously has those positive earnings reports where profits are increasing and it's beating those estimates, that's what triggers big institutions to buy more. That's when you and I can make a lot more money. Now, regarding the share price, if we jump over to the fair value, this is the estimated fair value, and it's a very conservative estimate in 10 years, 190. I believe this stock can definitely go to 100 based on the rate it's increasing. It could go to $100 in the next year, year and a half, somewhere in there. But I'd love to hear what you guys have to say. Where do you think the share price can go in the next year? All right, if you like this video, hit that like button. If you want to see more videos like it, hit that subscribe button. And if you want to buy and sell stocks on your own with confidence, you can join Tykr for free. All right, we'll see you in the next video. Bye for now.